And there is the closing bell. Welcome to the weekly market report. I'm AJ Monte, and this is a daily chart of SLV, which is the silver ETF. And as you can see here, we had a pretty big drop in silver. It's one of the biggest drops of the year in a one-day drop in price, and you can see that we're getting very close to my downside target of 26.47. Now we're only about 30 cents away from that, but take a look down below. We have an increase in volume on the way down as the oscillators are also pivoting lower once again. Now once this downside target on SLV hits, I think we could see a little bit of a bounce to fill this gap, which would bring us right back up to the moving average. And then I have a longer term downside target right around $23, to be exact, $22.98. Now I'm starting off with silver because we have a lot of our members are trading silver. They're in, they're out, they're parlaying their position. And we also had a request to analyze Bitcoin, which is /BTC. If you take a look here, you can see that we had a pivot point lower, which is a lower high, lower low. And Bitcoin has this big red candle today again on higher volume. Look down below. We have a cross in the sell signal for the CCI. And if you're following me on X, you'll know that I have a downside target of 64,000 for Bitcoin, at which time I think we could see a nice bounce and then possibly even take out the highs. So that is silver and Bitcoin to start off this report. Let's go right to DIA. If you had a chance to watch my midweek report, you'll know that I said that we would see a bounce. We have seen that. And now that we are at my upside target on DIA, right around 389.76, you can see that we have a long shadowed candle that closely resembles a shooting star. And while that is not a pivot point, it's a half signal. Keep in mind that a half signal, if I'm looking at a one-day candle and measuring the next day from that candle, a higher high and a lower low is a half signal. Another type of half signal would be having that same type of candle with a higher low, lower high. These are both half signals right here. And so that is not a pivot. A pivot is when you have a candle with the very next day showing a lower high, lower low. That would be a pivot. And so we do not have that, and we're waiting for that pivot to occur. And then once we have that pivot, then I believe we're on our way to hit this downside target of 379.61. So for the short term, I'm just going to draw a very short downside leg target right there, down on the diamonds at 386.32. Then we could see a continued move lower to test the lows from back here in May. And then we'll see whether or not we bounce off of my ultimate target of 379.61. So that is the diamonds. I know that's a lot of content for just one ETF, but as we take a look at IWM, we are on our way to hitting this downside target of 198.95. I also have that highlighted in this horizontal green dotted line. I think we will see that target hit next week, possibly Monday and or Tuesday. As you can see, the volume is increasing on the way down. Now remember, when I follow my 7-point trading checklist, which I'll get to here towards the end of this report, you'll know that I keep an eye on the price and volume being the top two most important signals. So we do have a pivot point lower here on IWM on increase in volume. Therefore, I keep that target at 198.95. So we'll keep that in place, and we'll see what happens next Wednesday. Now, the Qs, again, still being influenced by the Magnificent Seven. You could see that we had another half signal. Let me zoom in here for you. You could see, as I described to you earlier, a higher high but a lower low. That is a half signal. We do not have a pivot point as of yet. I do believe we will. You can see we hit my downside targets down here. So what I'm going to do for next week is draw another downside target of 455.89. That will bring us right back towards the moving average. You have to understand that the moving average is still going to move up as the price is moving higher or trading above that moving average. So the moving average will be drawn up to the price, hence the reason why I dropped that target line right there. So we have a little bit different of a scenario. Yesterday, we had this red candle on a drop in volume. Now remember, a drop in volume on the way up is bearish. And we didn't have much of an increase on the volume here today. But look down below, the CCI is heading towards that sell signal. I think next week what we will see is the CCI will eventually cross and form that sell signal, which could drive prices lower than the moving average next week. We'll have to see. But again, being very conservative. To repeat again, I have that downside target right there on the Qs at 455.89. That brings me to SPY. You could see that we have a bearish candle yesterday, which is very much like a hanging man as I zoom in there. And then today we have a candle that most closely resembles a shooting star. Again, a half signal, higher high, but a lower low. Half of a pivot is a half signal. Now, I'm going right back down. We know we've already hit my downside targets from last week. Down here, I'm moving right back down to 527.07. Look at the CCI hinging lower. This is another one I think will cross with a sell signal probably earlier in the week. Now, this is very valuable information, not just for swing traders, but for option traders as well. Some of you are relying on these targets to position your option spreads correctly with the right strike prices. Now, if you've never traded options in your life, you may not even know what a strike price is. That's why we have StickyTrades University. If you're interested in learning more about options and trading the most conservative option strategies, which are spreads that we trade, then you could follow along in the StickyTrades University, take some of our courses, then you could plug into some of my services. You don't even have to trade. You could spend time learning, because education is a risk-free investment. Take your time like you would in a college course to learn the content, and then once you feel confident enough and are well-versed enough in option trading, then you might decide to put a little money into the market and tiptoe your way into this volatility pool, right? So again, SPY downside target 527.07. And this brings me to the VIX. What are we waiting for on the VIX? We're still waiting for a pivot. Guess what? We don't have that yet. We have lower highs, lower highs, lower highs. Today we had a higher high, but a lower low. Another half signal. But guess what? The VIX is getting ready to pivot up. I think we're going to see a nice pivot higher, and that will form the C pivot in the ABCD pattern. Let me first draw what the target will be for next week. I'm putting a higher target on the VIX, bringing that up to 1363. You can see that's going to be $1.40 higher from where we are right now. So we're going to have about almost 11% move, I believe, in a move higher for the VIX. And once we get that pivot, remember what I was talking about last week and the week before last, is right now at the very bottom of this pivot here, we have A. We had a pivot lower to form B. We are now waiting for the pivot higher, which would be a higher high and a higher low right here. Once we get that pivot, then we could put a C label right there, and then that will bring us ultimately to a higher D, which would most likely bring us to a point higher than the resistance B that I highlighted back here. So that is my report. Now, if we look at what's happening economically, very important that, remember what I said, you got to follow the 7-point trading checklist. What I've described to you in this report is identifying the type of candle and whether or not we have pivots. I'm analyzing volume. I'm talking to you about the 20-period moving average. And so when you put that all together and you look at what we're seeing, you could check off on your trading checklist, not just for the major market ETFs, but for individual stocks. if you see an overwhelming succession of bearish signals all the way down, then at least that's telling you not to go with a bullish position, right? You want to put the odds in your favor. So that trading checklist is available to all of you. And if you're not a member yet, you can set up a free membership on StickyTrades.com. Just follow the link to the video that I have in the description box below, and you will be able to set up a free membership and then download the content from there. Now, economically, I'm going to make some recommendations here with regard to who I believe you should follow if you want this content directly. If you go to the Kobasi letter, that's on X. Just follow that tag right there and you'll be able to get this information as well. Another one is going to be Game of Trades. And another one I would recommend you follow is The Great Martise. I'll get to those in a minute. But as you can see here, this came out earlier this week on June 4th. We have 63 banks on the brink of default, according to the FDIC. Now, I reported that last week when we talked about $517 billion of unrealized losses are being held by the banks. And that is the first of the dominoes starting to go off in the banking sector. Be very careful. I think that will be the trigger that ultimately throws the whole markets into a tizzy. And so keep an eye on the banks. If you want to look at the regional banks, you could track and follow ticker symbol KRE, which is the regional bank ETF. Now, we're also seeing a declining GDP. It's not negative GDP, but with the declines that we're seeing lately, that will, I believe, ultimately lead us to a shrinking GDP, which now throws us into the throes of a possible recession or maybe worse. Now, over 50% of Americans believe we're already in a recession. I think because we're in a political election year, presidential election season, they're doing their very best to keep those numbers looking happy and healthy and all rosy. But we all know what's really happening. All you have to do is look at the gas pumps, go to the grocery store. You can figure it out. We all know that prices are going up, and that is going to cause consumers to pull back on their spending, and that's exactly what a recession is. Now, we're also looking at the lowest mortgage demand in over 30 years. Isn't that interesting? And a record $17.7 trillion in household debt. Now, that is something that ultimately leads to bankruptcy. So how's that soft landing going for you? I don't see a soft landing at all. Now, as I mentioned, the Great Martise, talking about the $517 billion in unrealized losses hitting the U.S. banking system. This is the story that's being repeated over and over again. And guess what? You heard it here at Sticky Trades over the last months as I've been continuing to report on the banks, believing that this is going to be one of the biggest, or maybe even possibly the biggest banking crisis ever. Again, my thoughts on that, to record this for the record. I believe they're going to let the regional banks fail and then call in the FDIC to secure the depositors and back them, while the bigger banks, backed by our government, will come in and scoop up all the regional banks for pennies on the dollar. That's a cheap way to get their acquisition and to expand their reach and control over the banking sector. So keep an eye on that. Remember, you heard that story here first. We'll have to see whether or not that plays out. Now, Game of Trades, as I said, great one to follow on X. Job openings have just seen a sharp move down, and this came out on June 4th. And this is the kind of decline that you see only 3 times since 2000. And if you look at the chart down below, what's happened as a result of declines like this, the shaded areas that you see right here are what happened after that, and those are recession areas. Look at how steep this decline is, and we don't have any gray areas there showing up. Again, we'll talk about manipulation and what's going on with the economic numbers on another report. But I'm telling you, folks, I am so happy and thankful that you are watching us. I believe this is going to be the week that we're going to break the 11,000 subscriber mark. We have you and all of those who have been following us to thank for that, because you're the ones that are driving this audience. You're the ones that are helping share the videos and commenting and liking, and I can't thank you enough. Listen, have a great weekend, and we'll talk to you on the midweek report on Wednesday. Take care. So long.